Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is testing a quite strong historical monthly support and demand area. From here, all this previous rejection to the upside was created. At the moment, the market is testing the exact same zone and has already started rejecting it to the upside with the possibility of creating this double bottom at this historical demand and support area. So from a monthly standpoint, everything seems quite clear. The nearest resistance zone would be the previous high, which at that point, if the market actually goes and tests this previous high and respects it as resistance, at that point, we would be officially in a monthly range. So the next logical step would be for the market to go and test what kind of liquidity we have inside of this area, meaning that there is the possibility of more bullish price action being developed, at least by judging this market just from a monthly standpoint. Dropping down on the weekly time frame, what we can see is that we just had a perfect shift from a weekly bearish trend to now a weekly bullish trend. In fact, we were having the creation of lower lows and lower highs. Then the market entered inside of this horizontal accumulation phase. Then we had the shift to creating higher highs and higher lows. And at this point, there is a possibility of seeing yet more development of a higher highs and higher lows from a weekly standpoint, which means that there is a possibility from here to see first a correction before then the continuation to the upside, because the next logical step after this impulse to the upside would be first to see a correction and then the continuation to the upside, essentially for the continuation of the creation of higher highs and higher lows, which is the definition of an uptrend itself. So here on the weekly, everything is quite clear. We can also notice that if we look left, this zone here was the previous high from which this rejection to the downside was created, therefore a previous resistance area, which now that the market has broken it to the upside, has the possibility of being first retested and then rejected to the upside. Now, dropping down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about USDCHF just a few days ago. I spoke about it after the market, when the market was around this area, and I explained all the reasons for which we could expect first this correction and then a potential push higher. And then after the market created that, I explained all the reasons for which this market had a good probability of first creating a correction to this zone and then creating a continuation to the upside. And again, that is exactly what the market did. And by the way, I will link in description both those previous analysis, so you can go and check them out for more free education. Now, at the moment, what we can notice is that the market is breaking above structure again. If the market will successfully manage to create a strong impulse away from that resistance, from this resistance, at that point, this previous resistance would become support. So after the break on the retest of the previous resistance turn support, at that point, there is an increased probability of seeing more institutional longing, which at that point could further increase the probabilities of seeing a potential rejection to the upside away from this level. Now, why do I say more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the CHF, the first thing we have to keep in mind is that if we're looking at the data for the CHF, we're actually already looking at CHF USD. So if we want information on USD CHF, we simply have to reverse everything. So if we read here that institutions have decreased their net positions from minus 17.1k all the way down to minus 29.9k, it means that institutions have been moving, so the non-commercials have been moving to the bearish side for the CHF And if they are shorting the CHF, in order to short the CHF, they must be longing USDCHF. So if net positions here are getting decreased, that means that institutions are actually longing USDCHF by shorting the CHF, or better said, CHF USD. And we can see, in fact, how with the last reports, they have closed 3,000 shorts and added 1,000 longs on the CHF. And this means that with the very last report, we have seen slightly net positions getting decreased once again, but in the long term, it is very clear how they're moving to the bearish side with the CHF, increasing their shorts from the low here at 25K all the way up to 38K. So what this means is that there is a possibility to see some short-term weakness of USDCHF, but that could simply only mean that once support is tested, more longs from an institutional perspective could come on USDCHF, at that point potentially pushing it higher. So in my opinion, if we will see this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction, impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.